So why wait for those big ETF approvals? I mean, when the real action, the real innovation, it's happening right now, right in this like underground fight club of decentralized asset treasuries, or DATs. Welcome back to the deep dive. We cut through the noise, get you informed fast. Maybe some surprising facts, bit of fun too.
And today, yeah, we're diving deep into this absolutely fascinating showdown. It's between two major players in the Solana ecosystem, Upexi and DeFi Development Corp. Both are just aggressively stacking Solana, SOL, and really trying to carve out their space in this new world of corporate crypto treasuries.
Exactly. And our mission for you today, we're framing this whole thing as a crypto judo match. We want to tell who's got the better strategy, the better moves for the long haul. It's not just about holding crypto, right? It's about building something durable. It's like a strategy battle playing out in real time.
On one side, you've got Upexi. This company made a really dramatic pivot, almost cinematic, like you said. They went from traditional e-commerce to being this Solana treasury powerhouse.
And then on the other side, there's DeFi Development Corp, DFDV. They came out of a real estate SaaS background, believe it or not, but now they've totally reinvented themselves. Fully crypto native, their goal. Nothing less than being the gateway to Solana's ecosystem. So yeah, it's way more than just who has more coins.
Definitely. We'll be digging into their business models, their financials, how they handle regulations, the vision from their leaders, and their strategic positioning. Think of it as rounds in this judo match. And by the end, we should have a clearer picture, maybe even crown a champion, and you'll know who's really pushing the envelope.
All right, let's get into it. Round one, business operations and models, the stance and strategy. So how are these guys actually built? What's their game plan? Upexi's story is, well, it's pretty wild. Founded back in September 2018 as Grove Inc. And their original thing was rolling up e-commerce brands, pet care stuff like Lucky Tail, even Cura mushrooms. Pretty standard stuff.
Right. But then, bam, a hard left turn. They pivoted, and I mean aggressively, into crypto, specifically Solana. And it wasn't just dipping a toe in. Upexi quickly became known as a canonical Solana treasury company. What that means for you listening is basically they're a recognized major holder and operator in the Solana space. They're holding around 2 million SOL tokens now.
2 million, wow.
Yeah. And what's really fascinating is this dual model they're running, they still pull in a solid $22 million a year from those traditional consumer brands.
The pet stuff and mushrooms.
Exactly. But on top of that, they're generating something like $65,000 a day from staking their SOL.
Per day.
Per day. Which, projects out to potentially $24 million annually just from the staking.
It's a massive shift in focus, moving from physical products to digital assets like that. And they're not a tiny operation either, right? They've got 95 employees across Tampa and Nevada. So this isn't just some side hustle.
Not at all. It's a core part of their strategy now. Now, let's look at DeFi Development Corp, DFDV. They also have a pretty interesting backstory. They used to be Janover Inc. Their game was real estate financing, AI-driven software for that sector.
Okay, so TradFi roots.
Definitely. But their transformation was, like you said earlier, more of a total reinvention. In April 2025, some former Kraken executives took control. They rebranded from Janover, ticker JNVR, to DFDV. And their new tagline really says it all. Crypto-born, TradFi fueled, built to stack Solana.
Okay, that's pretty clear messaging.
It is. And what really sets DFDV apart, it's not just about holding SOL in their treasury. They actually run their own proprietary Solana validator infrastructure.
Okay. So for anyone listening who isn't deep in the weeds, running a validator means they're actively helping to run the Solana network itself, like processing transactions, securing the blockchain.
Precisely. It's like being part of the core engine room. They have over 500,000 SOL delegated to their validators. That means other people trust them enough to stake their SOL with DFDV's operation. And the benefit, they earn validator fees on top of the normal staking rewards. So another income stream right there.
Got it. And they didn't just ditch their old business either?
Nope. They still run that real estate platform, apparently serves about 1 million users a year, connects billions in debt financing. So they've kept that engine running too.
Wow. Okay. That definitely feels, much more deeply woven into the crypto fabric than Upexi's model. But here's something that jumped out at me operationally. The margins. Get this. DFDV apparently hits 98.47% gross margins on its traditional real estate tech business, Upexi's. Their e-commerce side is 46.76%. That's a huge difference.
It's a stark difference, yeah. And it really highlights DFDV's ability to generate multiple revenue streams, especially high-margin ones from software, that Upexi's more traditional product model just can't replicate easily.
So what does that operational efficiency, that higher margin, really tell us about their potential agility in the crypto game?
Well, it tells us quite a lot, actually, that super high gross margin DFDV has. It usually points to a really lean operation, probably heavy on software, low overhead. That kind of structure makes you nimble. It means you can likely pivot faster, integrate complex new things like crypto operations more smoothly.
Right, compared to Upexi managing physical products, inventory, logistics.
Exactly. That inherently carries more overhead, more complexity. It can make diving deep into a highly technical field like blockchain, well, a bit tougher, a bit slower. So right out of the gate, you see these very different foundations. One company shifting its focus, the other completely reinventing itself. That initial stance, that strategy, it really sets the scene for what comes next.
Makes perfect sense. Okay, foundations laid. Let's see how that translates into financial power. Time for round 2. Revenue analysis and financial performance. The power strikes. Let's talk money. Upexi's financial shift is, as you said, remarkable on the surface.
Yeah.
They're holding that 2,518 SOL worth what? Around $334 million at current prices.
Roughly, yeah. And they weren't shy about funding it. They raised over $300 million just in 2025 specifically to buy SOL.
Okay, so the crypto income stream is primarily those staking returns.
Okay.
Around 8% APY you mentioned.
That's the main crypto revenue driver, yes. APY, annual percentage yield, basically the return they expect on their staked SOL over a year. But, and this is a big but, the company's still unprofitable. Their recent EPS was negative $4.
Ouch. Okay, so EPS, earnings per share. For listeners maybe less familiar with stock reports, that's basically the company's profit divided by the number of shares. Negative means they're losing money per share.
Correct. And they missed analyst estimates significantly too, which isn't a great look.
Yeah, for a company making such a bold move into a new, potentially risky space, isn't staying unprofitable a major hurdle, especially when you stack it up against traditional finance expectations?
It absolutely is a concern. Their SOL stash is impressive, no doubt. But if you're just relying on staking rewards and you're still losing money overall, it suggests the core business, including the crypto side, hasn't yet found a way to consistently generate value that covers all the costs. It makes Upexi feel more like a direct bet on the price of SOL going up rather than a robust business generating ongoing income from its operations.
Right. More speculation than operation, in a way.
You could frame it like that. Now, contrast that with DFDV's situation. Their SOL holdings are similar, 1.83 million plus SOL, worth maybe around $371 million. Slightly more value, actually, given recent price moves.
Okay, comparable size. But the funding story sounds different.
Oh, completely different. DFDV boasts this massive $5 billion equity line of credit.
Wait, $5 billion with a B?
With a B. And they're already using it. They deployed $165 million from it back in July 2025. That's serious financial firepower available to them.
Incredible. And crucially, you mentioned their revenue model is more diverse. Not just staking, but validator ops and DeFi integrations. What does that mean practically?
Right. So DeFi, decentralized finance, it means they're plugging into things like lending platforms, trading exchanges, yield protocols that run directly on the Solana blockchain, no banks involved.
Okay.
This lets them potentially earn yield in multiple ways, maybe lending out some assets, providing liquidity, things like that. It creates these multiple income streams that can, importantly, compound over time. The returns from one activity can fuel growth in another.
Ah, the magic of compounding.
Exactly. And the result, DFDV demonstrates, according to our sources, superior financial metrics and, importantly, positive earnings. That's a huge differentiator from Upexi.
Yeah, that profitability piece is key.
It really is. So what's fascinating here, like you said, they both hold a ton of Solana. But DFDV's layered approach, staking, validating, DeFi, plus that efficient legacy business and their overall financial health, just gives them a much clearer advantage. They're building value that compounds. It goes beyond just hoping the price of SOL goes up.
It feels like structural resilience versus just asset exposure.
That's a great way to put it. For you as an investor thinking about this space, Upexi might feel like a simpler, more direct SOL bet. DFDV feels more like a platform with built-in shock absorbers for volatility, a crucial difference in this emerging asset class.
Definitely. Okay, innovative strategies, financial muscle, but none of it matters long-term without playing by the rules, especially in crypto. So let's move to round 3. SEC filings and regulatory positioning the defensive holds. Navigating regulation is, well, with everything in crypto right now. And it seems both UPXI and DFDV are taking this very seriously. Both apparently have clean records, no SEC enforcement actions. That's huge.
Absolutely critical. It builds essential trust. UPexi, for their part, seems quite transparent. Their recent SEC filings detail their SOL strategy, the risks, their treasury operations. They even report metrics like SOL per share, 0.0339 SOL per share, specifically. And remember, they had that NASDAQ compliance issue after their big pivot, but they fixed it with a 20-to-1 reverse stock split. Shows commitment to staying listed and playing by the established rules. That's not easy to do.
No, definitely not. But DFDV's approach sounds maybe a level up, more sophisticated. Their reporting apparently separates out the digital asset treasury from the real estate platform results.
Yes, that segmentation is really helpful for investors. It lets you see clearly how each distinct part of the business is performing.
And they go deeper, right? Things like fair value measurements and impairment testing. What's that about?
Right. So fair value measurement is about how they value assets like SOL on their books, which can be complex with volatile crypto. Impairment testing is basically checking regularly if the value of those assets has dropped significantly and needs to be written down. They also include detailed sensitivity analysis. Like they've actually calculated that a 10% swing in SOL's price could impact their financials by about $9.7 million. That level of foresight and disclosure is pretty advanced for this space.
Wow. Okay, that shows they're really thinking about the financial plumbing.
Exactly. And they also manage the whole name change, ticker change from JNVR to DFDV, all while staying compliant with the exchange. It paints a picture of a team that's very adept at navigating the regulatory landscape, even during major transformations.
So comparing the two, that detailed segmentation, the advanced financial modeling DFDV does,
Sure.
what does that signal for long-term investor confidence versus UPEXI's approach?
Well, the fact that DFDV goes into such granular detail on fair value, impairment, sensitivity, it really demonstrates a mature, proactive stance on financial reporting in crypto. It shouts transparency and rigorous risk management. For you, the investor, that arguably provides a deeper layer of comfort, maybe more predictability, in a sector that's often, frankly, criticized for being opaque. UPexi is compliant, absolutely, which is good. But DFDV's detailed approach suggests a more deeply integrated regulatory strategy, potentially building greater long-term stability and trust.
It feels like they're trying to set a higher bar for public crypto companies.
Could be. They're showing it's possible to operate transparently with significant digital asset holdings. Okay, moving on. Round 4, Solana Evangelists driving vision, the hype, and the heart. This round is about the leadership. Who's really driving the bus, not just financially, but with passion and vision. UPEXI's leadership definitely embraced Solana. CEO Alan Marshall made that famous statement. Solana isn't a crypto project. It's a settlement layer for the digital economy. That's a big, bold vision.
Yeah, framing it as fundamental infrastructure. And their chief strategy officer, Brian Rudick, former head of research at GSR, a major crypto market maker, brings that Wall Street cred. He's out there pushing Solana's speed, scalability, the whole package in the media. They're definitely vocal.
No doubt, they're strong advocates. But then you look at DFDV, and their CEO, Joseph Onorati, is described in our sources with, get this, Michael Saylor level intensity.
Wow, okay. Comparing yourself to Michael Saylor, the ultimate Bitcoin bull, that's a statement.
It's a very bold claim. Saylor is practically synonymous with corporate Bitcoin adoption, so Onorati, explicitly positioning himself as the Michael Saylor of Solana, sets incredibly high expectations.
So what does that kind of intensity actually mean for DFDV? Is it all hype, or does it translate into something more tangible, more impactful vision for Solana? Are there risks to that kind of singular focus?
That's the key question. On the plus side, that intensity absolutely creates a powerful, unified vision. It grabs attention, attracts capital. And Onorati isn't just talking, he's backing it up with equally bold moves. He calls DFDV the gateway to Solana's ecosystem. And they're leading genuinely innovative projects, like actually tokenizing DFDV's own company stock on the Solana blockchain. That's a massive step, putting real-world assets onto the chain.
Tokenizing their own stock? Okay, that's not just holding SOL. It's using the chain in a fundamental way.
Exactly. And it's not just him. His whole team, the COO, Parker White, head of research, Pete Humiston, they're constantly engaging with the community on X Spaces, talking Solana treasury strategies with thousands of people. That level of team engagement, coupled with the technical innovation, it feels like more than just hype. The potential downside of a single charismatic leader may be over-reliance, but here, the team seems deeply involved, which lessens that risk.
So it's not just enthusiasm, it's demonstrated technical depth.
Precisely. Their leadership shows this deeper technical commitment and innovation that goes way beyond just buying and holding SOL. It's a fundamentally different approach to being a Solana company.
Right. It's like the difference between being a fan and being on the team, building the stadium. You want leaders who don't just talk the talk, but really walk the walk. DFDV's team seems committed in a way that suggests a different kind of long-term vision for Solana's role.
Well put. Which leads us perfectly into round 5. Strategic positioning and competitive advantages, the judo throws. This is where we see the payoff. How are they actually building lasting advantages?
Yeah.
Upexi positions itself smartly as that institutional bridge, connecting traditional finance, TradFi with Solana. They've got backing from big players like GSR Markets and about 15 other digital asset VCs. That lends serious credibility.
Yeah, that institutional backing is important, and they focus on compliance, using institutional-grade custody like BitGo. That appeals directly to traditional investors who need that security and regulatory checkbox ticked. They're innovating too, right? SOL-backed convertible notes planning to tokenize shares through a platform called Opening Bell.
They are, but, and this is a key point from our sources, they seem to primarily rely on external partners for the core blockchain tech stuff. For you listening, Upexi offers maybe a simpler, cleaner, more institutionally familiar on-ramp to get Solana exposure.
Okay, the bridge metaphor holds. Now, DFDV.
DFDV, I'd argue, has built superior strategic positioning through comprehensive ecosystem integration. Big phrase, but what it means is they're not just using Solana, they're part of it. We talked about their validator infrastructure, they're actively running the network. And they developed their own liquid staking token, DFDV SOL.
Right, the one that lets you earn staking rewards and use the value elsewhere in DeFi.
Exactly. It's a really clever piece of financial engineering native to crypto. Normally, staking locks up your SOL. Liquid staking tokens like DFDV SOL give you a tradable receipt for your staked SOL. So you earn yield, but you also have liquidity to use in other protocols. It's like having your cake and eating it too, DeFi style.
And that token is actually being used.
Oh, yeah. It's integrated into major Solana DeFi protocols like Camino Finance, Drift Protocol. That creates network effects. The more places DFDV SOL is used, the more valuable it becomes.
And they have other partnerships too. BONK, the meme coin, Sanctum Protocol.
Right. They're weaving themselves into the fabric of Solana DeFi. And then there's this global franchise idea, the DFDV Treasury Accelerator, planning to basically clone their model and set up regional Solana treasury companies around the world.
Wow, that's ambitious is an understatement.
Extremely ambitious, but it shows the scale of their thinking. So when you look at their proprietary techals, the validators, the liquid staking token, their partnerships with Oracle providers like Switchboard.
Oracles being the things that feed real-world data onto the blockchain securely.
Correct. Critical infrastructure for advanced DeFi. All this gives DFDV what feels like a decisive advantage. They have this technical moat, a defensible edge built on their own tech, and deep integration. Upexi, relying more on external partners, just doesn't seem to have that same kind of built-in defensible technical advantage. So this is really where the rubber meets the road, isn't it? Are you just holding the asset, or are you deeply embedded, building with the asset, shaping its ecosystem?
It seems like DFDV is playing a different game entirely. Not just owning Solana, but becoming part of its operating system. That technical moat sounds like a huge factor.
It really does. It's not just an advantage. It's something Upexi, despite its institutional connections, would find very difficult and time-consuming to replicate.
Okay, so the moment of truth. After 5 rounds, who takes the title in this crypto judo match? Let's do the competitive advantage assessment and declare our champion. Based on everything we've laid out, it feels like DFDV is pulling ahead pretty decisively.
I think the evidence points strongly in that direction, yeah. Their revenue diversification superiority is just undeniable. Multiple income stream staking, validator fees, DeFi integrations, that legacy business, potential franchise fees down the line. It's just a much more resilient model than Upexi's heavy reliance on SOL's price and basic staking. For you, the listener, that translates to potentially more stability, less risk tied to just one factor.
And that technical infrastructure moat we just discussed, that's huge. They're not passive, they're active builders. Operating validators, creating DFDV SOL that builds network effects, makes their platform stickier, more valuable over time.
Then you have the pure scale and efficiency advantages. Remember those gross margins, 98% versus 46%. Even with similar SOL holdings, DFDV seems to be extracting more value more efficiently. That suggests better operational leverage, better ability to scale.
And their strategic innovation leadership feels more pronounced. Tokenizing their stock, the global franchise model, the deep DeFi integrations, it feels like they're not just participating, they're actively trying to define what a public digital asset company is.
And wrapping it all up is their financial strength. Positive earnings are a big deal here. Plus, that massive $5 billion credit line gives them incredible flexibility and firepower. It's a stark contrast to Upexi's losses and likely more dilutive ways of raising capital.
Now, that's not to say Upexi has no value, right? They still offer that institutional credibility via GSR, regulatory clarity, a simpler path for TradFi investors dipping their toes into Solana.
Absolutely. For a certain type of investor, Upexi might be the preferred vehicle. Simpler exposure, familiar backers, but...
What? Based on this analysis, DFDV seems to have built something more robust. A truly crypto-native financial platform that generates value in multiple ways, beyond just holding SOL. They're not just betting on Solana, they're building with Solana.
That's the crux of it. And that's why, in this crypto judo match, DFDV emerges as the stronger long-term competitor. They are, based on this deep dive, the champion. Their infrastructure, their financial performance, their ecosystem integration, it all adds up to a more sustainable, defensible advantage. Upexi offers valuable exposure, yes, but DFDV's technical edge and diverse revenues build a much stronger foundation.
So what's the big takeaway here for you listening? While everyone's eyes are glued to potential ETF approvals, these underground fights, as we call them, between DATs like Upexi and DFDV, they show where the real innovation is happening now. Public companies aren't just waiting. They're actively building value, creating new models right inside the crypto ecosystem itself. It's happening far away from the headlines sometimes.
It really is. And this deep dive leaves us with a pretty provocative thought for you to mull over. As Solana keeps growing, will we see more traditional companies try to make the big pivot like Upexi did? Or will it be the truly crypto-native builders, the ones like DFDV who are built to stack Solana from the start, who solidify their lead, who ultimately redefine what it even means for a public company to truly embrace digital assets?
Something to think about. Keep watching these players, Upexi, DFDV, and others who will surely follow, because the future of corporate treasuries, and maybe corporate strategy itself, is being written in crypto right now.